Introduction to Telekom Malaysia Berhad. Since founding in 1946, Telekom Malaysia Berhad has played a crucial role in Malaysia's telecommunication environment. TM was first founded as the Telecommunication Department of Malaysia. TM is the top telecom company in Malaysia, providing a wide range of services such as enterprise solution, high-speed internet, mobile and fixed line phone service, and more. Issues that occur in Telekom Malaysia Berhad. Firstly is technological advancement and infrastructure upgrade. The fast progress of technology, including the worldwide transition to 5G and the growing need for high bandwidth internet, require major investment by TM in updating its network infrastructure. In order to obtain the required permit and license funding, this involves significant financial expenditure and negotiating complicated legal settings. If you cannot keep up with this technological advancement, you risk losing your competitive advantage and receiving lower quality service. Next, intense competition. There is strong competition for TM from both domestic and foreign telecom service providers. Rivals are actively gaining market share by providing innovative service, customizable package that appeal to a wide range of consumer and competitive price to maintain and increase its client base. TM need consistently innovate and offer additional service. Furthermore, the Malaysian government effort to open the market and address legal problems might increase competition and force TM to quickly adjust to shifting market conditions.
Background of Maxis. Maxis Berhad has dominated Malaysian telecommunication business since its founding in 1993. Ananda Krishnan, a Malaysian millionaire, founded the company 2 years later in 1995, and it swiftly established itself as one of the country's pioneering mobile communications carriers. Maxis took numerous strategic action in its yearly that laid the groundwork for its future success. Developing the prepaid brand holding in 1919 was a wise option because it allowed the company to capitalize on Malaysia's growing desire for affordable mobile services. Maxis strengthened its market dominance in 2022 by acquiring rival Timecell, establishing itself as the country's biggest telco. Maxis spent to the next decades innovating and adapting to the fast-changing telecom landscapes. The 2030 launch the free basic internet on Hotlink, which provide free data access to vital website, was a customer-centric initiative that helped promote mobile internet adoption. The company rebranded in 2020, which included a new logo and the brand objective of always be ahead, demonstrated its dedication to remaining at the forefront of the industry. Today, Maxis is the clear market leader in Malaysia with over 9.8 million revenue-generating users as of 2020. The company's supremacy is a mirror in its excellent financial success with a market valuation of over $10.8 billion as of May 2017, placing it among the world's largest publicly traded corporations. Same as a telecom company, Maxis also have their own issue. First is 5G network rollout delays. Malaysia's 5G rollout has been delayed due to unresolved network ownership and structure difficulties. The government had planned to build a single 5G wholesale network, but big telecoms such as Maxis objected. Maxis and other carriers are delaying 5G expenditure and product release due to lack of clarity surrounding the 5G model. As a result, Maxis has forecast lower capex in 2024. Prolonged delays may jeopardize Maxis' ability to provide competitive 5G service and drive uptake. Second issue is intense competitions in home fiber. Malaysia residential fiber broadband market is very competitive with providers like Unify, Maxis and Time Interest battling for market share. While Maxis had significant subscriber growth in this category, profitability still needs to grow. Maxis residential fiber business now generated less than 10% of total revenue. Driving profitability in this category will be critical since it's viewed as a potential growth engine for the organization. Another that is low adoptions of enterprise digitalizations. Maxis focus on developing digital transformation solutions for Malaysia's small and medium-sized organizations. However, the acceptance rate for this service is not projected to be great in the foreseeable future. Economic instability and a gradual rebound in company confidence, particularly in the first half of 2024, may reduce SMEs' desire to invest in new technology. Maxis must educate the market and offer compelling value propositions to promote enterprise adoption. The last issue for Maxis is potential impact on dividends. The delay in the 5G rollout and lesser capex may result in Maxis experiencing longer leasing periods to access the 5G network, but potentially lower pricing. This could strain the company profitability and dividend payouts in the short run. Maxis has been known for a generous dividend policy. Maintaining shareholder returns will be a priority for the company management as it navigates the current issues. In short, Maxis face near-term challenge from 5G rollout delays, fierce competition in home fiber, and slow enterprise digitalization's adoption. Resolving the 5G network structure and increasing profitability in new growth regions will be critical for the corporations to preserve its market leadership.
Next, I will be discussing the ratio analysis of Maxis per head for the year 2023. So we will explore various financial ratios to assess the company's performance in key areas such as liquidity, market valuation, activity, financial leverage, and profitability. So the first, liquidity ratio. Let's discuss the liquidity ratios. For the current ratio is 0.56, indicating that Maxis has less than 1 ringgit in current assets for every ringgit of current liabilities. This suggests potential difficulties in covering short-term obligation and may be required external financing or asset liquidation. So for the quick ratio also at 0.56. Exclude inventory and similarly indicate a low level of liquid assets relative to current liabilities. This implies that the company's liquid assets are insufficient to meet its short-term financial commitments without selling the inventory. So for the market ratios, we have market ratios. The first is price earning ratio. The price earning ratio is 0.13, which is quite low. This indicates that the market price per share is not high relative to the earning per share, potentially signaling undervaluation or low market confidence. Next, dividend yield. With a dividend yield of 4.42, Maxis demonstrates a moderate return to its shareholders throughout dividend. This can be attractive to investors to seeking income. And then we have earning per share. The earning per share is 0.11 ringgit, reflecting moderate profitability. This shows the company's ability to generate earning for its shareholder. So next, for dividend per share. The dividend per share is 0.16%, 16 cents, indicating that Maxis is returning value to its shareholders through dividends. Then market to book value. The market to book value ratio is 0.73, suggesting that the market values Maxis less than its book value. This might indicate undervaluation. Then for activity ratios. So we're moving to activity ratios. Average collection period. The average collection period is 53 days, which is considered good. It indicates that Maxis collects its receivable efficiently. For inter turnover, the inter turnover ratio is 219.77, which is excellent. This indicates a high level of efficiency in managing and selling inventory. For fixed asset turnover, the fixed asset turnover ratio is 1.41, showing good efficiency in utilizing fixed asset to generate sales. And then total asset turnover, the total asset turnover ratio is 0.45, which is relatively low, indicating that there might be room for improvement in using total asset to generate revenue. And then for the financial leverage ratios, now let's look at the financial leverage ratios. Total debt ratios. For the first is total debt ratios. The total debt ratio is 0.43, indicating a moderate use of debt in the company's capital structure. So this level of leverage suggests that the company has not overextended itself with debt. So next, debt to equity ratio. The debt to equity ratio is 1.26, which is relatively high. This indicates a substantial reliance on long-term debt financing, and suggests in increasing financial risk. Time interest earned. The times interest earned ratio is 4.55, which shows a strong ability to cover interest payment. This is positive aspect of the company's financial health. And then profitability ratios. Finally, we have the profitability ratios. For the first is gross profit margin, GPM. The gross profit margin is 53%, indicating that Maxis is retained 53 cents of each ringgit of sales after covering the cost of goods sold. This high margin suggests effective control over production costs. So then net profit margin. The net profit margin is 10%, reflecting the company's ability to convert sales into profit after all expenses. And return on total asset, ROA. The ROA is 4%, showing moderate efficiency in using asset to generate profits. And then return on equity, ROE. The ROE is 17%, indicating efficient use of shareholders' investment to generate return. And operating profit margin, OPM, the operating profit margin is 19%, demonstrating good control over operating expenses and a strong ability to generate operating profits. So for the conclusions, what I can conclude is Maxis perhaps shows strength in several areas such as gross profit margin, inventory turnover, and time interest and ratio. However, there are areas that require attention, particularly in liquidity and total asset turnover. The company demonstrates moderate profitability and efficient use of assets and equity to generate return. So by addressing the highlighted concerns, Maxis can further enhance its financial performance and stability. I think that's all from me. Thank you.
Assalamualaikum. My name is Amira Adrana binti Badru Auzan, number matric 2023114329. So I will continue the presentation about the ratio analysis for Telekom. The first ratio is liquidity ratio. Liquidity ratio, it is a general indicator of a company's capacity to fulfill impending or short-term obligations. It emphasizes the ability to pay for immediate liabilities like account payable and notes payable with short-term assets like cash and other liquid assets, as well as various current maturities. Higher liquidity is typically desirable because it denotes a greater capacity to pay short-term obligations when they become due. Under liquidity ratio, we calculated the current ratio and quick ratio. Current ratio represents a company's capacity to use its short-term assets to pay down its short-term obligations. Based on the calculation, the trend from 2019 to 2023 shows a gradual decline in the current ratio, indicating a decreasing ability to cover short-term liabilities with short-term assets. While the ratio is still above 1 in 2023, The consistent decline suggests potential liquidity challenges that the company should monitor and address. Next, the quick ratio, also known as the acid test ratio, is a measure of a company's ability to meet its short-term obligation using its most liquid assets. Based on the calculation, the quick ratio shows a general declining trend from 2019 to 2023 with slight fluctuations, while the company maintained a ratio above 1 throughout these years, indicating it generally had enough liquid assets to cover its short-term liabilities. The decreasing trend might be a signal to monitor. It suggests a gradual weakening in liquidity, which could become concerning if the trend continues or if the ratio drops below 1. The comparison between Telekom and Maxis for the year 2023 is Telekom has a much stronger liquidity position compared to Maxis. Telekom's current ratio for the year 2023 is 1.11, which is above 1, indicating that it can meet its short-term obligations with its current assets. On the other hand, Maxis' current ratio is 0.56, which is significantly below 1, indicating potential difficulties in covering its short-term liabilities. Telekom also has a much higher quick ratio, which is 1.07 compared to Maxis 0.56 for the year 2023. This indicates that Telekom is in a better position to meet its short-term liabilities using its liquid assets. Overall, Telekom demonstrates a healthier liquidity position compared to Maxis for the year 2023. So that's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Farah Chambi Hussein. My metric number is 2023116001. And today I will present about the market ratio. Firstly, it is the price earning. Telekom price earning ratio is significantly higher than Maxis, indicating that Telekom stock is priced higher relative to its earning. This suggests that investors have higher expectation of Telekom future growth compared to Maxis. And next is dividend yield. Both companies offer similar dividend yields, with Maxis slightly ahead. This means both companies are returning a good portion of their earnings to shareholders in the form of dividends, which is attractive to income-focused investors. Maxis offers a better dividend yield than Telekom for the year 2023. And next is earning per share. Telekom earning per share is significantly higher than Maxis, indicating that Telekom is generating more profit per share. This reflects better overall profitability and efficiency in generating earnings. Next, dividend per share. Telekom provides a higher dividend per share compared to Maxis, suggesting that Telekom is more generous in sharing its profit with shareholders. And lastly, market to book value. Telekom market to book value ratio is significantly higher, indicating that the market values Telekom equity more highly compared to its book value. This could be due to higher growth expectation or better market perception of Telekom asset and business prospect. And here is the comparison between Telekom and Maxis at the year 2023. The chart shows that Telekom generally outperformed Maxis in 2023 with higher price earning ratio, earning per share, dividend per share, and market to book value, indicating better growth prospect, profitability, and market valuation. Both companies have similar dividend yield, though Telekom's is slightly higher, reflecting generous dividend payout. Overall, Telekom appears to be more attractive investment based on these financial metrics. Thank you. That's all from me.
Hi, Assalamualaikum. My name is Nufardini binti Nazli. My metric card number is 2023103345. So, I will continue present about the activity ratio between Telekom company and Maxis company. Activity ratios are defined and efficiency of the organization in utilizing its asset for generating cash and revenue. It is used to check the level of the investment made on asset and the revenue that is generating. So, under the activity ratio, there are average collection period, inventory turnover, fixed asset turnover, and total asset turnover. Next, for the trend analysis, for the average collection period ratio from 2018 to 2020, it shows a decline from 70.68 to 66.99. while in 2021 to 2022 it shows stagnation, which is 69, and in 2023 it shows increased values, which is from 69 to the 85.75. Overall, it seems that the telecom company takes a longer time period to collect the account receivable. Based on the rule of thumb, average collection period of 30 to 60 days is considered acceptable to collect payment from customers. For the inventory turnover ratio from 2019 to 2022, it shows decline from 52.61 drop drastically to 16.70, while in 2023 shows slightly increase from 16.7 to 25.67. Overall, it seems that the telecom company number of time inventory has been sold are not efficiently managed. Based on the rule of thumb, inventory turnover ratio range is between 5 and 10 for many industries that suggests very efficient inventory management. Next, for the fixed asset turnover ratio from 2019 to 2022 shows decline from 0.74 to 0.72, while in 2021 to 2023 shows that slightly increase from 0.79 to 0.82 and to the 0.94. It seems that Telekom are well in use fixed asset to generate sales, but based on the rule of thumb, it show lower ratio because it lower than 1. That suggests ineffective use of fixed asset to generate sales. For the total asset turnover ratio, from 2019 to 2022, it shows stagnation with figure 0.45, while in 2021 to 2023, it shows slightly increase from 0.50 to 0.52 to the 0.57. It seems that Telekom are ability in using assets to generate sales, but based on the rule of thumb, total asset turnover ratio above 1 indicate that the company is improving asset utilization. Here, we can see the good and bad at cross-sectional in fixed asset turnover and total asset turnover of Telekom company are good than Maxis company. Maxis has shorter average collection period, which is 53 days compared to Telekom 86 days for the year 2023. Besides, Maxis has longer time inventory turnover, which is 219 compared to Telekom 25 days. So overall, Telekom efficiency ratio are all relatively good compared to the Maxis company, with exception of its average collection period and inventory turnover. While Maxis has longer time fixed asset turnover, 1.41, compared to Telekom 0.94. Maxis has shorter times. Maxis has shorter time total asset turnover, which is 0.45 compared to Telekom 0.57. This means that Telekom is using its asset effectively to generate revenue, but it could improve its time period to collect the account receivable more quickly and manage their time with shorter to sell and replace its inventory to prevent potential issues such as overstocking, slow-moving inventory, or changes in market demand and affect the sales inventory.
Next, we move to financial leverage ratio commentary. Based on the calculations, the trend analysis shows that Telekom experienced a sharp increase in its total debt in 2020, followed by a gradual decrease in subsequent years. By 2023, the company total debt ratio had reduced to 0.85, indicating a lower level of debt compared to its peak in 2020. For the debt to equity ratio, Telekom's debt to equity ratio has steadily improved over the past 5 years, declining from a relatively high level of 1.05 in 2019 to a much lower level of 0.96 in 2023. This suggests that the company has been making concerted efforts to reduce its debt burden and improve its financial stability during this period. For the time interest and Telekom, time interest ratio has been consistently negative throughout the 2019 to 2023 period, indicating that the company has been struggling to generate sufficient earnings to meet its interest obligations. The ratio has steadily declined over the years, reaching its lowest point in 2023, which raises concern about the company's financial stability and its ability to service its debt. To compare with the Maxis, the total debt ratio for Maxis have a good total debt ratios, with the Telekom reaching 0.85 and Maxis reaching 0.43, which is closer to the industry average. Meanwhile, for the debt equity ratio, it shows that Maxis has a good debt equity ratio than Telekom, which is 1.26 for the time interest, and Maxis had a better 5.55 than Telekom, negative 5.12. This indicates that Telekom has a lower leverage than Maxis. Telekom also has the ability to cover interest expenses with earning than Maxis.
Hi, Assalamualaikum. My name is Nadia Atirah binti Bakti Jamali. My matric number is 2023516223. I'm going to present about profitability ratio. What are profitability ratio? Profitability ratio are a class of financial metrics that are used to assess a business ability to generate earnings relative to its revenue, operating cost, balance sheet, asset, or shareholder equity over time. Using data from a specific point in time, based on the calculation, the trend analysis of Telekom from 2019 to 2023 show that the company's profitability has steadily improved, with a significant increase in its gross profit margin, return on total asset, operating profit margin, and total equity, indicating enhanced operational efficiency and better return for shareholder over the year. Gross profit margin. During the year 2019 to 2020, the GPM increased from 4.47 to 5.54, which is bad, but it now decreased from year 2021 to 2023, which is from 3.79 to 3.34, means the business is getting better at controlling its COGS expense. For net profit margin, from year 2019 to 2023, overall, that's good because in the year 2023, it shows 0.89, which is it keeps increasing. This is good since the company keeps generating more revenue and getting better at controlling its overall expense. Next, the return on asset. For this firm, very good because it's keep increasing every year. Investing in this firm has a low risk of loss and high chance of profitability. A sustainable and increasing ROE over time can mean a company is good at generating shareholder value because it knows how to reinvest its earnings wisely so as to increase productivity and profits. Return on equity. The return on equity for this firm is very good despite it decreasing a little in the year 2021. In the year 2023, the return on equity increased back to a higher level, which is 0.20, meaning for every 1 ringgit invest, the return on equity is 20 cents. Investing in this firm has a low risk of loss and high chance of profitability for investor. This means the owner is getting more return from his capital. Based on operating profit margin calculate for this company has been increasing from 2019 to 2023. This is not risky because the highest operating margin is more favorable compared with a lowest ratio because this shows that the company is making enough money. To compare with Maxis, it shows that Telekom have good profitability ratio. This is indicate that Telekom have a higher net profit margin, indicates better cost management and efficiency in the converting revenue into profit. Additionally, Telekom greater return on asset and return on equity demonstrate more effective use of its asset and shareholder equity to generate earnings, highlighting its overall stronger financial health and operational success. For horizontal analysis of Telekom income statement, the amount of gross profit from 2019 to 2023 are increasing, but in 2023 it decreasing. So as we can see, in 2019 the total gross profit is negative 1.96% and decreasing more to negative 3.59% in 2020, but it increasing back until 2022. In 2023, it decreasing, which is 0.02%. Total operating income in 2019 to 2022 is decreasing, which is from 246.13% to 23.94%. In 2021 to 2022, it's increasing but decreasing back in 2023. For net income before taxes have the highest amount in 2019 and the lowest amount in 2021, which is negative 2.48%. For the net income after taxes, it keep increasing from 2019 to 2020 and decrease in 2021, but they increase until to 2023. The amount of net income, the amount of net income available excluding extraordinary and including extraordinary, these three have the same amount since 2019 until 2023.
Welcome everyone, my name is Nursha Mimi binti Shahrani. My matrix number 2023367 and 73. So today I will be conducting a vertical analysis, also known as a common size analysis of Telekom's income statement for the years 2018 to 2023. This analysis will help us understand the changes in Telekom's financial performance over this year. So let's start with the revenue. As expected, the total revenue for each year from 2018 to 2033 is consistently set at 100%. This is the baseline against which all other financial metrics are compared. Cost of revenue is the first key metric we will be discussed. Over the 6-year period, the cost of revenue has gradually decreased from 48% in 2018 to 43% in 2023. This indicates an improvement in cost efficiency and management. So next, we have the gross profit. Gross profit has seen a positive trend, increasing from 52% in 2018 to 57% in 2023. This suggests that Telekom has been successfully in managing its direct costs relative to its revenue. Moving on to selling, general and administrative expenses, there are some fluctuation in this category, ranging from a low of 6% in 2022 to a high 12% in 2018. In 2023, it stands at 8%, indicating better control over administrative expenses in recent years. So these depreciation and amortization expenses have been relatively stable, hovering around 19% to 24% over the period. In 2023, it accounts for 22% of the revenue, slightly lower than the peak in 2022 at 24%. Other operating expenses show more variability in 2023. It jumped to 22% from 12.54% in 2023. The category required to examination to understand the specific factors contributing to such a significant increase. When we consider total operating expenses, they have remained steady at around 82% to 85% from 2018 to 2023, with all notable decreases in 2019 to 89%. This brings us to the operating income. Operating income has shown significant improvement, rising from a low of 3% in 2018 to over 17% in 2023. This indicates that Telekom has become more efficient in generating profit from its core operation. For non-operation income and expenses, particularly interest income and expenses, we see some fluctuation. Interest income has been relatively minor but consistent, peaking at 1.2% in 2020 and slightly decreased to 0.77% in 2023. Net interest expense, however, has shown improvement, decreasing from -3% in 2018 to -2.4% in 2023. Other than non-operating items have remained minimal, with other net showing minor fluctuation between -0.3% to 0.17%. When we look at the net income before taxes, there is a notable increases from 0.10% in 2018 to 40.76% in 2023, showing a significant recovery growth profitability before tax consideration. So provision for income taxes has also varied, with a notable decrease in 2023 to -0.62%, which might be due to tax adjustment or benefits. Finally, net income after taxes and net income both show a remarkable improvement, with net income rising from -2.2% in 2018 to 15.26% in 2023. This upward trend reflects the overall improved financial health and profitability of telecoms over the period. In conclusion, Telecom's vertical analysis reveals a positive trend in gross profit, operating income, and net income, it indicating better cost management and increased profitability. The fluctuation in certain expenses and other operating income categories suggest areas that may need closer monitoring and management. Overall, the financial performance of Telecom has shown substantial improvement from 2018 to 2023. Thank you for your attention.
Overall, from this assignment, we have analyzed that both Telekom and Maxis company has their own strengths and weaknesses. It is proved from the common size of financial statement analysis for the year 2023. Telekom has good total revenue, which is 100%, compared to operating income, which is drastic drop to 3%. So, you can conclude that Telekom has better profile and outcome based on the ratio and financial comparison data. It also shows that company has good performance and worth to be impressed by the investor, in which likely worth and lead us to choose and invest in Telekom over Maxis. So that's all from our presentation. Thank you.